In European financial news, consumer inflation expectations across the euro area experienced a significant jump in March. This raises concerns for the European Central Bank as it evaluates the economic impacts of the ongoing conflict in Iran. The public now expects prices to soar by 4% over the next 12 months. This is a sharp increase from the 2.5% expectation recorded in February. Furthermore, long-term inflation predictions for 3 years ahead also rose to 3%. These rising numbers place expectations dangerously close to the previous peak seen during the height of the price spike in October of 2022. Major global investors are heavily purchasing shorter-term European government debt, aiming to lock in high yields before they disappear. Financial giants like J.P. Morgan Asset Management and BlackRock are actively targeting these specific bonds. The debt recently dropped in value due to market expectations that the European Central Bank would aggressively increase borrowing costs. This strategy was anticipated to combat rising inflation driven by the ongoing Middle East conflict. Consequently, yields on 2-year German government debt have surged to their highest levels in almost 2 years. These bonds are highly sensitive to interest rate changes, making them a prime target for opportunistic global investors. Asian financial markets closed mostly lower on Tuesday as global investors carefully weighed new developments in negotiations between the United States and Iran. Japan's Nikkei index declined by just over 1%, stepping back from a record high reached on Monday. The Central Bank of Japan also decided to keep its policy rate steady at 0.75%, though it revised inflation estimates upwards due to global supply chain risks. Elsewhere in the region, markets in Hong Kong, Australia, and India all recorded minor losses. Meanwhile, United States market futures edged slightly higher, even as stalled peace talks and Middle East tensions pushed global oil prices upward.